I have seen incredible wealth gains for myself and other people by investing in real estate. I think real estate is the smartest way to look. You
Absolutely.
look smart over 10 years. The day you buy something, I've never bought a property and thought this was the best decision of my life. Right now, I am actually excited about the property, but it's still not the best financial decision. I just like that it's in a good area and a big lot, and I'm
Right.
seeing the value in these things.
Hello, everyone. Today, I have a very special guest joining us. Michael Abraham is the Los Angeles-based luxury real estate agent with Compass and a co-founder member of the Ambre Real Estate Group. Hi, Michael. It's such a pleasure to have you on my podcast.
Nice to meet
Welcome.
you as well.
Welcome. Michael, maybe you would say a little bit about yourself. What's your background and what you specialize?
Sure. I love the way you say my last name. It sounds so much more sophisticated. I just say Abraham, but with the R, it has a lot more distinction. So I love that. I've been in real estate for about 2 years, but I have a background in design and architecture and marketing. I'm also an investor. So here in Los Angeles, I'm with Compass. My team is called Amre, and just happy to be on the podcast to talk about luxury real estate and perhaps the differences between New York and LA. I'm originally from Philadelphia, so New York is my second home. That's where I was living prior to moving here.
That sounds good. Good to know. So you actually, from New York and Philadelphia, so you know the markets, what's happening there and here.
I've lived there. I never was an agent, but I've lived there. And actually, my sister's in the process of buying a property on the Lower East Side. So we've been talking about different things. And the way the contracts are handled in New York are radically different than LA. So I was giving all these suggestions. And then I actually did some research and realized it's a lawyer based transaction. Ours are all documents. We really don't have lawyers involved unless you get over a certain price point.
Lucky you.
Yeah. Yeah, I
We
bet.
have lawyers involved in every transaction. We cannot do any paperwork without it.
It's
So
funny.
I just want to know the difference. Let's say I'm selling a lot of luxury listings in New York, and as you know, I'm working with a lot of investors with the commercial properties as well. So I want to know what's the difference, how the LA different, and I know you have a lot of luxury properties there as well. Can you tell me a little bit about your market and what kind of value you can bring to the clients and opportunities there as well?
I can only speak to the LA market. We have a massive size market, which is something I think probably the biggest difference is the distance between everything in Los Angeles versus New York. You'll have one building that's holding a $500 million worth of real estate. Here, that's 1 square mile or 2 square miles will be the equivalent. So there's a lot of variety in how people approach LA than perhaps New York. I think in New York, I want to be on the Lower East Side or the Upper East Side. Here, they're looking for a particular type of home. Perhaps they want a view, perhaps they want something that has a pool. So I feel like maybe the needs are different when it comes to what people's expectations are. In LA, it's a city of entertainment, culture, and people are looking for a place that they can entertain in. And so maybe the needs and necessities are different. But once you get over a certain price point, my experience that anybody that can afford to spend over 5 million, and I believe 10 million is ultra luxury, they know real estate fairly well. And so you have to know as much or at least as much as them if you're going to have a
Right.
serious conversation and be helpful.
I see. Well, here in New York, we do have a lot of regulations, and especially, it's shifting a little bit the market for the buyers.
Mm.
And the buyers' behaviors are a little bit different than I saw, let's say, a year ago. What do you feel about that? Do you have any regulations that, it's affecting the market?
Yes, we have, they call it the mansion tax, and that's not the accurate name. I have to double check what it's blanking on it. But basically, over $5 million, there's an immediate, I believe, 5% tax or $500,000 tax on the transactions, which
Mhm.
is a terrible idea. And there's just a lack of thought. And they put these labels on things to disguise what they're really doing. That includes multifamily. That includes 10 small units that could be built or transacted. And so we're having a lot of taxation. I call penalization of certain groups of people that actually are the ones taking big risks in trying to make change in the city. So I'm really not for any of those types of taxations. I think we have to protect, obviously, tenants. I can go on and on, but it's not effective. And using the term mansion tax is actually a complete misnomer. It's a tax over any large building, which includes apartments, residential, commercial. So I'm not sure what's going on in New York, but that tax here is definitely actually doing more harm than help.
I feel the same. I feel the same. Pension tax is something that you cannot, it's a problem. What can I say? And we cannot escape that.
Do you have something similar, or is there anything going on like
Yes,
that?
pension tax, and it has to be after 1 million and up. So
Yeah.
it's different numbers then. But you know what I see a lot of my clients asking me, Stella, if I will do some kind of an upgrade, would it add the
Mm.
value versus just spending and wasting money? What would you recommend to your clients in your market?
I'm a value add investor, but that doesn't, I've learned that I have to decouple what I would want to do. So if I walk into a place and I see it being a mess, I'm excited because I want to put my stamp on it. But not everybody has that inclination or desire. So I really try to step into the shoes of my client and think, what do they want? And many want a turnkey solution. So unless they're willing to do the project, I don't advise it. However, if it's a small thing, something can get done in less than 2 months or even a month. Paint, flooring, new cabinetry, new countertops, new vanity, reglazing the pool, new landscaping. That should not deter you because those are really, really simple things that can be done. And there are a lot of talented people to do that. When you get into larger complex projects, then you inherit potential challenges because you become a manager. And what I've discovered, I know people that have done multiple projects, ground up, $10 million homes, and they're still on site almost every other day. For whatever reason, you need to really maintain and be on top of these projects because if they spiral out of control, it's not $100, it's $10,000,
Right.
$50,000. The cost for a mistake when it's just a line on a page is small, but when it's moving a wall or building something in the wrong location, not so good.
Oh yeah. Location is location. This is the
Yeah.
the main thing.
I will say this. So my sister's considering buying a place, and I'm blown away by the HOAs, but it's the only other city where someone thinks, wow, that's expensive. And
Right.
she's realizing she wants to do a lot of reconfiguration of the space. And I'm explaining to her that that's okay. Like you're going to find something that isn't a perfect fit. And what I discovered, maybe probably more so in luxury, is that people who can afford to do what they want do what they want. And oftentimes they don't think about the next buyer. So they're like,
Right.
you know what? I'm going to get rid of 3 bedrooms and turn it into a gallery. Not great for everyone. So there is an element where you typically are inheriting someone else's style. And I think that's what makes a minor renovation a lot of fun is you get to put your stamp on it and make it your home. So I'm always for it, but I try to be measured in what I recommend because you can also end up spending millions or hundreds of thousands of dollars
Right.
very quickly if you're not careful.
And I feel I position myself as an advisor in real
Mm,
estate, especially all my past clients, we were purchasing residential property, and now I
mm.
see that we're shifting more to the investing and buying the investment property for themselves. And I'm like a advisor for them. What's the best way? What's the best location? And especially right now, what I actually see, a lot of multifamily properties are converting to that rent control. And I know that LA market has the same regulations of the rent control. What do you feel about that? How do you position yourself with the multifamilies?
I think rent control conceptually is a very good idea. We need to protect tenants, but the way that it's handled is illogical. And what I think the biggest overarching thing is that we have short-term gains that neglect long-term benefits. And when you limit someone's ability to increase rent, or for instance, deferred maintenance, we just put a new roof on. It was 25 grand. The most that we can charge our tenants for that improvement is $50 a month. And the
Wow.
reality is that doesn't seem too equitable, but at least there's some way of recouping it. Basically, the funny thing about rent control is the place in the city with the worst rent control actually has some of the most expensive rents. So you really what ends up happening is the people who have been there the longest are being subsidized by the people who just moved. So if you
Right.
want to encourage people to move into the city, that's not the solution. I'm for what I would call diversity of housing from dormitory styles, which is something that's also discouraged because there's minimum size requirements. If I'm just get out of college, if you can tell me I can live in a shoebox and walk to the beach with my surfboard, I'm in. Or workforce housing, where it's a small thing where, there's bunk beds for kids. but you're in a great part of the city and you're a great school district, we need to tier up housing and we need a lot more public private partnerships. I can go on and on, I won't. So for me, and I think what's happening in New York, it's a short term, like limiting rent control or creating all these restrictions. And one last point is that we don't sunset any of these laws. We implement something and then they stay on the books forever
Correct.
and no one can keep track. For me, I actually do invest in multifamily. I'm actually an escrow on a multifamily property right now. And the way that you're able to make it work is that there's a lot of incentives to build more on a lot. And so our plan is to buy something that isn't really cash flowing great today. What we'll do is we'll renovate one unit and then add two more units. But even then, it's a lot of money and a big investment. And they do not fast track anything in this city. So it's a challenge.
It's a challenge and it's a risk. What do you believe? Let's say the long-term strategy when you buy for a long term, or let's say beats the short-term investing. You as an investor, what are your thoughts about that?
So I'm long term and I'm bullish on LA. I think LA, for all its challenges, is still an absolutely amazing city. So I think to myself, if LA is this great and it's so disorganized and can be run so much better, and I was just at a Urban League Institute conference and I interacted with 300 plus people. I interact with a lot, and they were all smart, hardworking people trying to make the city better. And I thought, and I was really impressed, and I wish I knew had joined sooner. But what the takeaway was is that there are a lot of smart people trying to implement and make change in this city in a positive way. So if you're bullish on the city, then I think you should invest long term. It's interesting because you hear people online and podcasts are like buying's terrible, renting's great. So I'm sure if they're saying buying's terrible, they have another thing you should buy, like their business concept or their book or their seminar. I have seen incredible wealth gains for myself and other people by investing in real estate. I think real estate is the smartest way to look. You
Absolutely.
look smart over 10 years. The day you buy something, I've never bought a property and thought this was the best decision of my life. Right now, I am actually excited about the property, but it's still not the best financial decision. I just like that it's in a good area and a big lot, and I'm
Right.
seeing the value in these things. If you believe, I had someone recently say, I would never buy in LA. I'm like, how long have you been here? 20 years. It's too expensive. Are you leaving? No, it's so why do you think it's going to change? You're not, the city is still very much enticing. The same with New York. I remember during COVID, New York, no one, everyone's going to leave. Or San Francisco, I was like, no, flight to quality. If the city is great and it continues to be a place people want to go, it's going to appreciate for the foreseeable future.
Well, real estate is all about, cycles. It's
Yes.
up and down, so it's gonna appreciate with the time. Like I attended last week a mastermind for investors. It's such a, how can I say, educational event, and they teach you, they show you how to buy, what's the right way to do it, how to
Wow.
calculate, add value and NOI and all these tips for investors to do the right decisions. Of course, you have risk in investing in real estate. Everything is the risk. You go outside, you're risking. But this is the way for a future. This is the way for a passive income. And I feel financial freedom, real estate is the key.
I agree 100%. It's challenging in our markets to get into the market, and I think that is what people find frustrating. I do feel like we're going to still see appreciation for a variety of reasons. One, there's about 50 to 80 trillion dollars locked away in older generations, and I believe that when they give that money to family, friends, and kids, if you ask what's the first thing they're going to want to buy, it's going to still be a house. And also, if I were to advise kids, I wouldn't say to my kids, go ahead and buy a sports car. I would tell someone to invest in real estate because at least that's an asset that will appreciate. So it's something that, and I think it was Ryan Serhant that was saying we have a system that's designed to make real estate go up in value over time artificially, and we definitely have a lot of tools in place that other countries don't have that allow you to spend more money than you have. The 30-year fixed mortgage, I don't think exists anywhere else. Nevertheless, it still allows you to enjoy and appreciate something, and then when you generate appreciation on leveraged debt, I'm
Right.
no finance or wizard. It's still an amazing scenario. And I also, going on tangent, like Warren Buffett's anti real estate because it's really good at something else. There are a lot of very successful people. I think prior to the tech boom, it was just real estate that made people rich, and that's not true. I'm for it, but I've also run a business that was completely unrelated, and that can be extremely lucrative, marketing or starting a service business. But I would say there is no passive business, but real estate is definitely, it's more once you build a train, you have to tend to it. It's not like you have to be there every single day. So it's more passive than other businesses,
Right.
but you still need cash. So you need to find a way to get the cash to buy the real estate. And the more involved you are, I say, if you want good tenants, be a good landlord. If you want a good home, take care of it. Many people neglect their properties, and that happens for a variety of reasons.
Wow, that's a lot of tips that we're getting here.
Yeah, you got me started, and it's only 8 o'clock, or it's early for me. You get me going.
All right. Well, on a different time zones.
Yes,
But you know what, Michael? It's such a pleasure having you on my podcast. And thank you so much for sharing your insights, your tips, your advice, and looking forward for more interaction with you.
pleasure meeting you, Stella. I appreciate it.
Thank you. Thank you. Have a great day. Bye bye.
You too.
Thank you for listening to the Stella Top Seller podcast. If building real wealth through real estate is your goal, this is your show. Subscribe and follow me on social media. I'm Stella Shalamova. Keep thinking bigger, investing smarter, and living the top seller mindset. Until next time.